Hello, everyone. Thank you for joining us on this Wednesday's free educational presentation. We give these free webinars each and every Wednesday, roughly around the same time. And today I want to talk to you about 3 exit strategies that will change the way you trade. These are 3 great methods that I truly believe will help you with whatever method you're trading, whatever strategy, whatever market, and whatever time frame. Because the beauty is you'll be able to apply these 3 strategies to all of those categories. And the great news is that you're going to get all of the rules to each and every one of these methods today. For example, let's take a look at this older chart here in FANG. Now, get used to this chart because we're going to be looking at this because all of the methods I'm going to be sharing with you today can easily be transferred onto the same chart. It makes no difference. Let's say you're looking at this and you're interested in it, but you haven't a clear idea as to what the stock wants to do. For example, it looks like it's going up, then it's going down, then back up. But ultimately, your strategy does generate some type of a signal, and you think that you want to buy here, okay? So you decide to get in to buy, and in the days later, you have a really nice profit on your hands, although it's only a paper profit. You're still wondering, where do I get out? Boy, should I get out right now? There are a lot of maybe people in a chat room saying, oh, this thing is going to take off. It's just the beginning. You should actually be buying more. Or you still may have other people saying, no, it's over, bought, time to get out. So you're really in a query. You don't know what to do. You decide to hold on, and then this happens, right? Look familiar? You stayed in a little bit too long. Maybe you even bought more shares. And now what originally was a nice paper profit has turned into a large loss. Well, this is what happens with so many traders when they don't have an adequate exit plan. With one of the methods I'll be teaching you, and you know all the rules to in just a few minutes, you actually could have exited right here at or near the top and potentially gained 25 points, exited your position entirely before the bottom fell out. So this is what we're going to be talking about today, 3 exit strategies that will change the way you trade. Welcome. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for nearly 49 years. Starting in a couple of months, it'll be 49 years. I started my career on the floor of the Pacific Stock Exchange, where I was on the floor for a total of 16 years, and 9 of those years I was a specialist. Specialist is just someone that made markets in roughly about 50 or 60 stocks. So I made markets during the crash of '87 and the bull market that followed. I left the floor in the mid-90s to manage money and to trade my own account. And 15 years ago, I teamed up with Pro Trader Strategies with one goal in mind, simply to educate traders. Now, a lot of people say, well, why should we be educated? What if I just, took your signals, whatever you did, have a signal service, a nightly signal service, or you tell me what you're buying and selling? Well, you see, that's what the entire industry is based on. You go into a website where someone tells you what they're buying or selling, or some guy on TV tells you what he thinks of the market, what you should be buying or selling, or maybe in some chat room. And that's why ultimately 80 to 85% of all traders fail. Those are the statistics. So you see, that model doesn't work when you blindly follow someone else. It's okay to become educated by someone else, but then you ultimately have to make your own trading decisions. So that's what Specialist Trading website is. We are an educational company, and that's our only goal, to educate you with a goal in mind so that you can make your own trading decisions. Now, we work with you once we educate you with all these different variables and ways in which to enter, exit, and place your stops. We have strategies, techniques, methods. We even have our own platform to actually apply all these methods. But ultimately, it's you that have to make the decision because, in my opinion, in nearly 5 decades of trading, the only traders that are still consistent, that are still around, not just for a couple of months or a couple of good years, but for a couple of decades, are the ones that make their own trading decisions. They don't wait for the earnings to come out to tell them what to buy or sell. They don't listen to some guy on TV or in a chat room. They don't even listen to some guy in a webinar tell them what to do. They simply educate themselves so that they can be in charge of their own trading destiny. And that's our goal to instill in all of you. And you'll see that in today's educational presentation. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying these 3 exit strategies, but please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. And since we are first and foremost an educational company only, all examples are strictly for educational purposes only. Now, more ways to get education on a daily basis. Or 2 different ways. Actually, you can follow us on X, formerly known as Twitter. There's our handle right there. I would suggest copying that down if you'd like to follow us at SPCLST Every day I post between 5 and 7 different snapshots of signals our methods have generated, also techniques that we've been trading along with financial wisdom. So lots of great free education there. As well, if you're watching this on YouTube, we are streaming live on YouTube right now. We know we have a lot of people following us that way. Please kindly hit the subscribe button so you'll get a lot more content via YouTube. Okay, with that stated, let's begin. And I'd like to start out with a particular theme. I usually have themes of my webinars, and this is today's theme. Having an exit strategy can avoid unnecessarily having pain. Now, think of it. Most traders actually that come to our courses and come that are new, doesn't matter how long they've been trading, maybe 20 minutes or even 20 years, they have difficulty with their exit plan. Either they stay in too long and they give away a lot of their profit, or else the profit turns into a loss, or else they get out too early and they take a nice little profit, or they break even and they see the market continue to go either higher if they're long or down more if they're short, and they leave a lot of profit on the table. So they don't have any idea how to exit. Their trading plan may be suitable and may be consistent. It's just their exit strategy is faulty. They don't have a clear-cut plan. And so this leads to a lot of discretion, and it also leads to what we talked about earlier, listening to someone tell you what or how to trade. So having an exit strategy can avoid that unnecessary pain. Well, we're going to give you actually 3 exit strategies today for you to pick and choose from. Now, here's what we want to set straight first. There are only 2 types of exits. I know a lot of you say, well, wait a minute, you're giving me 3 strategies, so how can there only be 2 types of exits? Well, there are 3 strategies, but they fall under only 2 types of exit categories. That's all there are. So let me define what they are. Here is the 2 types of exits. The first is what we called fixed exits. All right. Now, fixed exits is very similar to what it says here. It's fixed. It will not change. It stays the same. And oftentimes, you know where this exit is prior to even getting to the trade. You'll know prior to entering where you're going to get out. And you place usually a limit order, and it just stays there at that point. That's why it's fixed. Now, traders who use fixed exits like to know where they're getting in, and most especially where they're getting out. They want to know how much profit they're going to take, how big it is, how little it'll be, if it'll be suitable for their account size, for their risk-reward ratio. So these are the type of traders who like fixed exits. Let me just go here. And then the next one is the exact opposite. It's called a dynamic exit. Now, a dynamic exit means it's more fluid. It changes with the market. Therefore, you're never really sure where you're getting out. Oftentimes, you will enter into a trade and not know where you're getting out if you have a profit. Now, this does not mean your stop, where you're getting out with a loss. You'll always have a stop loss in place, but we're talking about where you're getting out with a profit. Now, where the fixed exit knows exactly where they are getting out, a dynamic doesn't, because it's based on the ebb and flow of what the market is doing. Basically, you are letting the market tell you when to get out by a certain set of parameters. And if these parameters are met, the market is saying it's time to get out. Okay. Now, these types of exits are perfect for traders who like those big runs, as you've often seen, where you've gotten out maybe too early and it just keeps going more and more, higher and higher. Well, a dynamic exit is perfect for those type of conditions. All right, so let's get on with our strategies now. We're going to talk about exit strategy number 1, and this is called the previous high, previous low. So what exactly is this? What are the rules to this? And who is this strategy for? Well, it's for traders who want a fixed exit. If you're the type of trader who knows where you want to get out, even before you've pulled the trigger, strategy number 1 is perfect for you. Okay, so let's look at our old friend FANG here, F-A-N-G, all right? Let's say you are a student of candlesticks and you like to trade off candle patterns, okay? You feel very comfortable, they seem to work with you, and you like to enter based off these candle patterns. So you're looking at this particular chart, and what do you see here? Well, you see a bearish engulfing pattern. This is a negative pattern, and a lot of traders like to sell based off of these. All right, so how would we use exit strategy number 1? If we were to sell, what we'd want to do is exit at the most previous low right here. As you can see, here's the previous low. Now, why do we want to exit there? Why do we want to cover or exit our short sale? Well, the reason is this previous low acts like a magnet. Price will be pulled or drawn towards that previous low. And so if you'd like to know where you're getting out, there's a good chance, the odds are in your favor, it's going to go back and test that previous low. So if you have any type of consistent method, this is a good place to start. Now, a lot of traders like to place their limit order right at the most previous low. So right here, if the previous low was, let's say, 125, well, you would put your limit order at the exact price that that low was established at right here. But still, some traders say, well, you know, Steve, oftentimes I've seen price come down just before the previous low and then start to go back up. Or oftentimes traders will say, I'll see it go lower just a little bit below and then start to go back up. It's up to you. This is where we say the power is in your hands. This is not a system where everyone does the exact same thing every time. In fact, all of our teaching and training goes against that philosophy. We want you to decide. We want you to decide for yourself. If you feel you want to put it exactly at the previous low, that's fine. You want to put it a little before, a little above it, a little below it, that's fine. It's up to you. Just do the research first and see which method of exiting works best for you. All right, so let's say we use this particular method and we sold, and look what happened. In a matter of days, price was pulled right down to that previous low, and then right after that, it started going back up. Do you see how that works? Remember, price will act as if it's being pulled down. The previous low will act like a magnet, and price will act as if it's being pulled down towards that magnet. Okay, so let's look at the next signal here. Okay, so you have a nice little profit right there. Things worked out great. And now you have another signal here based off another strategy you trade. And so you say, okay, I'm going to go long. All right, well, we use the same process, but instead of using the most previous low, we'll use the previous high, which is right here. Okay, this is where we feel that price should gravitate towards. All right, so we can either put it right at the exact same price right here, a little bit above, a little bit below. It's entirely up to you. Through your research, whatever market you like to trade, whatever stocks, futures, currency pairs, you'll get a good idea as to what is the best place to place your limit order for exit strategy number one. All right, so let's say we got long. We have our limit order right here, and let's track the trade. 1, 2, 3 days. It's right there, closes a little above, but we have another nice profit on your hands. See how we're adding up these profits using this simple previous high, previous low exit strategy. Now, here's one thing I want you to remember. As I stated, these highs and lows will act like magnets for price to be gravitating towards, but it does not mean that they will necessarily stop there. Now, oftentimes they will, as we stopped right here at the most previous low. But as you see in this case, it didn't stop. It kept going higher and higher. This is where a lot of students, especially beginners, will say, hey, that didn't work very well. I mean, I got out too early. But remember, we're not trying to pick the top, and we're not trying to pick the bottom to get out. We're just trying to get these nice exit plans in place so that you have some type of plan in place. So the point is, price still gravitated towards this, but it does not necessarily mean it's going to stop there. So it's entirely up to you. You have to know that going in. Now, look what happened after you would have exited. It went up for the next week or two, and then ultimately fell out of bed. Now, looking back in hindsight, when price was way down here, wouldn't you have been happy that you exited here and not trying to pick the top? So remember, a profit is a profit. Don't stand in the way of a method that will at least give you some profits. So that's it. That's exit strategy number one in a nutshell. Remember, this is a fixed exit. You will know where you're getting out even before you get into the trade, because you'll know where the previous high was, or you'll know where the previous low was. So if you're long, if you buy a stock or a market, currency pair, a future, you will exit at the most recent short-term high. If you're short, if you buy the puts, you will exit at the most recent short-term low. It's that simple. That's exit plan number one. Let's go to exit strategy number two. And this is what we call our 5-period simple moving average exit. So who exactly is this method for? Well, it's for traders who want the opposite. They want a dynamic exit. Remember, a dynamic exit is the opposite of a fixed exit. we have no idea where we're getting out with a profit. Remember, it's not the same as a stop loss. We will enter an order to get in the trade. We will enter an order to place our stop. But that doesn't mean we have any idea where we're getting out with a profit. We still have no idea. So a dynamic exit goes with the ebb and flow of the market. Let me show you how simple this particular strategy works. All right, our old friend FANG here. Let's go off that second buy signal, okay? So what you want to do with this particular strategy is whatever you're trading, whatever time frame, whatever market, could be a monthly chart of Apple, could be a tick chart of E-mini futures. Makes absolutely no difference. You apply a 5-period simple moving average on the chart, as we see here in blue. All right. And this is how this works. Once you get into the trade, you track the trade and you see how we are going higher. We're going in our direction. Now, the rules state that as long as price is closing above this 5-period simple moving average, you will continue to be in the trade. You will only exit when price closes below that 5-period simple moving average. So now we have a nice profit on our hands. Now, here's where students have trouble. They say, well, Steve, I sold here and it continued to go higher. Well, remember, you should only sell when price closes below the 5-period simple moving average. Did this close? No, it intersected, it touched, and we went below it, but ultimately the close was above. So the rules state you will only start to have a seller's bias once we close below. So we're still in this trade, and it's still making higher highs, but it appears to be running out of gas a little bit. We closed just a little bit above it, but ultimately, that's where we closed below. This is the first bar that we closed below. So you have two options now. Now, if you are a more aggressive trader, what you'll do is 2 minutes before the close, you'll simply just sell at the market and say, well, listen, we're going to close here below. There's no reason I see to have a huge rally in the last 30 seconds to go back above. So I'll just exit and say thank you. I purchased it right here. I got out reasonably high position up here. I say thank you. I got a nice profit. That's if you're a more aggressive trader. If you're more conservative, what you would do is, as opposed to using exit option A, we'll use option B. Okay. Now, what this states is once we close below the 5-period simple moving average, see how we close below, we'll exit. We'll still hold on to the trade, but we'll exit when price trades below. So we drew this little line right here, this red dotted line. Now, let's say the next day it trades below there. Well, we'll just sell at the market, or we could place a stop limit, a stop order in there. Okay. So that's how this works, because oftentimes you'll see maybe a little aberration will close below, hover below for a couple of days, and then go right back up. So this is for a more conservative, someone you want to be a little bit more conservative, and you say, you know what, I'm willing to hold on. Let's just see if it closes below. So let's say we took option B. Okay, we're still in the trade. Let's see what happened. Well, the next day we gap down. So if we had an order in there to sell just 1 or 2 ticks below that line, we would have exited on the opening and we would have gotten out. Okay, so with a more aggressive option A, well, we're exiting right on the close. So if we're in front of our computers, we see the market's going to close in about a minute, we just sell at the market because we know in 1 minute, most likely we're not going to rally and close back up again. All right. Or if we're more conservative, we'll say we'll draw a little line right below the low of that low and say, listen, tomorrow or the next couple of days, if it closes below there, if it doesn't go back up above the 5-period, if it closes, trades below here, I'll exit. So let's say either one we took, if we look once again back in hindsight, even if we took option B, they both were good exits and they both brought better gains than using the fixed exit, which was somewhere down here. Even option B had a better profit. Okay, so see how simple that is. And as you noticed, we had no idea where our exit was going to be the entire time we were tracking it. So this will tell you right away, you will know whether you have a profitable trade on your hands or not, simply by tracking it, seeing if it stays above the 5-period moving average or closes below. All right, so let's review exit strategy number 2. If you're long and you are a more aggressive trader, you'll exit at the market on the first price bar that closes below the 5-period simple moving average, okay? This is option A. And if you're short, if you bought the puts, whatever you want to do, you will exit at the market on the first price bar that closes above the 5-period simple moving average. Because obviously, if you are short, that means price is below the 5-period moving average until one day it turns around and it closes above the 5-period. Now, that's for more aggressive option A exits. Let's look at option B. If we're long, we're going to exit when price trades below the very first price bar to close below the 5-period simple moving average. And if we're short, or if we have the puts, we're going to exit when price trades above the very first price bar to close above the 5-period simple moving average. I know it seems a little wordy, a little complicated. Go back and look at this presentation. You'll get a better idea. Each and every one of you will be sent a link to this webinar, and you'll be able to watch the recording at your own leisure. Okay, so there you have the first two exit plans. Let's now go to exit strategy number 3, which I feel is my favorite, and I believe the most popular amongst our students at Pro Trader Strategies, and that's what we call range extensions. Okay, so who exactly is this strategy for? Well, it's for traders who want multiple fixed exit, giving them the ability to increase risk-reward ratio. So in other words, you're going to have different levels of fixed places to place your limit order to exit. And this will give you options as to how you want to increase or decrease your risk-reward ratio. Most traders like to increase their risk-reward ratio. If you're not familiar with what that is, that simply means if you're risking a certain amount of points, you want to make at least that same amount. But if you have a strategy that's anywhere okay or consistent, you should be profitable, even in a small extent. But what you want to do, most traders like to make twice the amount they're risking. So if you're risking 5 points, you want to make at least 10. If you're risking 10 points, you want a strategy that's making at least 20, and so forth. Okay, so let's share with you exactly what this is. Now, this may seem, once again, a little wordy and complicated, but once again, you can watch the video. It'll make sense after you watch it a couple of times. But you see this bar here that we have the green up arrow and the buy underneath it. That's what we call a signal or a setup bar. That's where all the rules of a strategy, regardless of what the strategy is based on, could be fundamental news, could be technical analysis, it could be the tides of the ocean. It makes no difference. But when all the requirements, all the rules have been met, that's what's called the bar, where all the requirements are met. That's what's called your setup bar. And you usually have, whatever method you're trading, you usually have a green arrow for a buy signal or a red arrow for the red setup, okay? So as we see right here, where we have that green arrow, this is our signal bar or our setup bar. What you want to do is measure the high to the low of that setup bar, and that will give you the 100% range. So in other words, we want to measure from the extreme high of that wick to the extreme low, not the open and close, but the extreme high to the extreme low. This is the real true range. Let's just say this is 5 points, just to make things easy, okay? All right, so now that's 100% because that's giving you the range. What you want to do is add that to from the very top of this bar, the very top of the extreme high, add that same amount of points. In this example, it's 5 points. And this will give you the first exit level because that's 200% because it's basically twice the range, okay? Now, we can add it again from that level, and that will give us 300%. We add it again, that will give us 400%. And one last time will give us 500%. Okay, so what does this mean? Well, once again, this is where you have to go into do a little soul searching and find out what type of a trader you are. Because we are giving you these options, but it's up to you to decide which one of these levels you want to take to exit for the particular strategy you're using. Now, if you're the type of trader that likes to get in and out quickly, you don't like to hold a lot of positions overnight, you want to tie up your money, you would most likely exit at this 200% level. You got long somewhere here and you exited and you're out. And that risk reward is you're basically making about the same amount that you were risking. So if you're risking 5 points, you're basically going to make roughly about 5 points. And if your strategy is halfway okay, you'll make a little money. It won't be a lot. You'll basically be trading water, but you may make a little money, okay? Let's say you're the type of trader that is more intermediate to swing trader. Well, in this case, then you would exit at the 300 or 400% level. So at 300, you're making twice Here we have 1, 2, you're making twice what you're risking. At the 400 level, you're making 1, 2, 3 times what you're risking. All right, those are good, known as good risk reward ratios. Now, let's say you think this thing is going to scream, almost like using a dynamic exit. You think it's really going to have a big move up. Well, then we would suggest traders who feel that way, who think that the market they've chosen is going to really move in that direction, exit at the 500% level. Now, the reason why we suggest that traders exit everything at the 500% level, we've seen through our analysis and on-site trading. This is not systematic. We don't go back 10, 20 years and have statistics. This is just through on-site, that most times markets will come up to this level and then the trend will change. So you want to at least get out of your entire position at the 500%. You don't want to still be long if price hits this 500% level, okay? So once again, if you're the type of trader that wants to get in and out quickly, use this level. You're a more intermediate kind of a swing trader, use the 3 and 400. And if you're someone who wants to get the most bang for your buck, you use the 500. So let's say we have studied this and we've said to ourselves, well, we really think this market's going to take off. I mean, according to our strategy and our analysis, this market's going to take off. So we want to exit at the 500% level right here. So we'll place a limit. Remember, this is a fixed exit. We'll place a limit order right here, an open order. And look what happened. In a couple of weeks, it went right to that level and then quickly changed trend. This is why we always suggest that our students exit their entire position at that 500% level. Excuse me, because oftentimes you'll see the trend change there. Now, there are a number of ways to do this. A lot of our students will say, well, Steve, maybe I'll have 400 shares. I'll sell 100 shares here. I'll sell 100 here, 100 here, and 100 here. That's fine. Other traders will say, well, you know what? I'll sell maybe half my position here and half here. Okay. Others will say, well, when it gets up to the 200%, my stop, which is right here, I'll move to unchanged. When it gets up to 300, I'll move my stop to 200 and so on. 400, move it up to 300 until ultimately it gets up to 500 and you exit everything altogether. This is what we call tracking a trade or following the trade. There are a number of ways which you teach in the course in which to apply this. But remember, ultimately, our goal as an educator is to share with you all these different variables. Your goal is to decide which one best suits your needs. Remember, a good mentor, a good educator does not trade for you. A good educator does not say, okay, here's what I think you should buy it here, exit here, place your stop here. That's not educating you. That's basically just giving you orders on what to do because that's what that person does. And remember, the entire industry is based on that concept. And if 80 to 85% of all traders fail, well, obviously that concept doesn't work. It's great to learn from educators, but ultimately you have to make your own trading decisions. That's why we give you all these different variables so that you'll be able to decide for yourself. Okay, let's review exit strategy number 3. This is a fixed exit, but a little bit different because we have different variables for exiting. If you're long, regardless of market or time frame, what you want to do is measure the range of the setup bar. Remember, the setup bar is the bar where all the rules and requirements come into play, and then you say to yourself, okay, I've got a buy signal. And then add that range, however amount of points, to the bar's high. These are the range extension exit levels, and continue to add them up for 500%. Conversely, we just do the opposite. If you're short, all right, what you want to do is measure the range of the setup of the signal bar from top to bottom, not from open to close, but from extreme high to extreme low. But now in this case, since you're going short, then you want to subtract it from the bar's low and keep subtracting it from those different levels. These are the range extension exit levels. Okay, there you have it. 3 exit strategies that I truly believe will change the way you trade. My only recommendation or suggestion for right now is to paper trade with these. You have the rules, you know exactly how to implement them. Go back and apply them to some signals you traded in the past or were looking at and see if they could have helped you. I truly believe these exit strategies could really help you and could have helped you be on the right side of the market and had a nice profit. Now, what a lot of students of ours say, even the ones that have been trading for a while, they'll say, well, Steve, I don't have a strategy to trade. I don't have faith in the one I've been trading. All of my signals have been losers for the last 6 months. Or someone could say, Steve, I just started trading. I really don't have a strategy yet. I don't even know what I'm going to be trading, what time frame or what market. Well, here's where we have a great offer for all of you because of our way of saying thanks for attending today's educational webinar. We're going to offer you what we call our Secrets of a Stock Exchange Specialist training sessions. These are 3 hours of training techniques plus a full strategy. Now, some years ago, I was asked to be the head speaker at a trading conference in Denver, Colorado. And I spoke for 3 hours. And the good news is the conference were lucky enough to record my presentation, and they gave us a recording of that. This is what this 3-hour presentation is. You will get 3 hours of trading techniques plus a full trading strategy. Now, remember we talked about traders who said, well, Steve, I don't have a strategy to trade. Well, let me share with you what you'll get here. This is our complete rules to strategy number 1. Now, strategy number 1 is our premier pullback strategy. Now, this is a pullback method that's designed to buy at lower levels and to sell, meaning to go short at higher ones. Let me share with you some examples of how strategy number 1 works. And these are some actual trades that some of our strategy number 1 members took. Okay, let's look at this chart here. Here's an older chart of PLTR. Now, obviously, it's going up. It's in a nice upward move. And you're saying to yourself, okay, this looks pretty good. Maybe I'll buy it. But then look what happened in the next following week or so. It starts to go down. And maybe that guy in that chat room that you follow says, hey, we're in a downtrend now. If you're long PLTR, time to exit, time to get out, because this looks like it's going to start to make lower lows. So you get scared and you say, you know what, I'm not going to buy this after all. I think I'll go on the sidelines. Or maybe if you were already long, you decide to exit your long position. But you see, this wasn't a downtrend. This was not a downtrend at all. This was actually a buying opportunity, or what we call a pullback in an upward trend. Pullbacks are buying opportunities in an upward trend. And look what strategy number 1 did. It does this all automatically, and it automatically generated 3 buy signals right at the very low of that pullback. Now, where everyone else was selling and getting out of PLTR, you could have been buying. Some of our strategy number 1 students did, and potentially captured 35 points in the following weeks. Another example, the Australian dollar for you currency pair traders here. Market's going down, right? There's no argument there, but look what happened after that. Okay, started to go up. A lot of people that trade the Australian dollar forex market said, hey, that's it. We bottomed out. We've got a number of positive signs here. It looks like we're making a new uptrend. Time to get long the Australian dollar. But are we really in the beginning of an uptrend? No, because strategy number 1 says this is a pullback. A pullback meaning that this is just simply a bounce. It's not an opportunity to get long. It's actually an opportunity to sell at higher levels. And strategy number 1 did just that. It generated a sell signal right here at the high of that bar. And look what happened. 460 pips, nearly $5,000 per unit in the following month had you gone short. Potentially could have captured. Here's another currency pair, a 4-hour chart, intermediate chart. Market's going higher, starts to go lower, looks like a downtrend. Nope, another pullback, another buying opportunity. 3 buy signals generated right at or near the lows before it went up 300 pips in the next week, roughly $3,000 per unit. Or we can look at double IPR. As we see, we're going lower. Looks like a clear-cut downtrend. There's no obligation there that we should be going higher. But all of a sudden, looks like we're starting to go higher. Higher highs, higher lows. Maybe that guy after the close on TV says, hey, you got to buy this stock. Looks like it's starting to go up. It's slowly going up, but we're probably going to make new highs, and it's going to, take off. Well, not an uptrend. This is simply a bounce in an overall downtrend, meaning it's a pullback. It is a selling opportunity, not a buying opportunity. Now, if you were long this stock, this would have been a good time to exit because strategy number 1 generated 2 sell signals, right here. So you could have used any of these 2 bars to exit your position, or if you're more aggressive, to actually go short. The stock fell 35 points just a week later. A year from today, you will have wished you became a member of this course. It's jam-packed with so much information, nearly 5 decades of me accumulating all these things from my days on the trading floor and things I still use today, including strategy number 1, okay? many more high probability trading edges. I just shared with you 3 trading edges for exits today. Well, how would you like maybe a dozen more different edges for entering and exiting? I tell you which indicators not to use. I go into the difference between a system versus a strategy. I'll share with you and reveal what the #1 chart pattern is that you should be applying to any strategy you trade with. I'll show you how to be on the right side of markets of any market in a matter of seconds. And lastly, the complete rules to strategy #1. Everything you're seeing here today in the Secrets of a Stock Exchange Specialist video seminar, you can apply to any market and any time frame. Now, Pro Trader Strategies, my sister site, they normally advertise this course for roughly $9.97, close to $1,000. Here's what we're going to do. For a very limited time only, we're going to drop that down to only $37. $37. But trust me, this is for a limited time only, probably only until the weekend. And then it will go back to close to $1,000. Think of it, for $37, less than getting lunch for a couple of people, you can have nearly 5 decades of tips and techniques that I've accumulated at your fingertips. And these are yours to keep forever, okay? So here's how to take advantage of this. Contact Pro Trader Strategies. They are my sister site. They're in charge of all the discounts. They're in charge of all the packaging and all of the tech support for any of our techniques and methods and our platform. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now, more than happy to take your $37 order over the phone. Remember, that is a deeply discounted price, but it's only going to be lasting probably until the weekend before it goes back up to nearly $1,000. Now, that link you see at the very bottom is the link that will take you to the info and sign up page if you'd like to do it on your own. It's not a live link, but a live link was posted in the chat box. So if you go to the little Zoom icons table there where it says, let me just see where it says participants, chat, question and answer. All you want to do is just click on chat and you'll see a live link posted there, okay? If there are any questions, now would be the time to ask. I'm going to leave this information up here. Someone's asking, can this work on futures? Yes, I am a futures trader myself. So if you want to trade futures, yes, I use these tips and techniques, these methods. I use the range extension X's myself just about 90% of the time when I'm trading futures. So yes, it's entirely up to you. It makes no difference. All of these things that I'll be sharing with you in the course, as well as what I did today, can be applied to any market and any time frame, okay? Steve, it came in a little bit late. How long can we watch this video? Well, you're going to get a link to this video probably today or tomorrow, and you can watch it as long as you'd like, but it's not the link that is going to be for a limited time only. It's the discounted price. So don't worry about the watching it. That's not the time limit. The price is the limited time offer, okay? So remember that $37 is for roughly about 3 or 4 days at the most. If you're at all serious about taking your trading to the next level, please come on board. And the one last thing I will say to all of you is that each and every one of you that decides to become a student of mine in this $37 offer will still get my private email address. So if you have any questions, if you feel something is a little maybe not complicated, but you're just not sure you have the right answer, you can always contact me via email, and I will be able to view whatever work you want me to check out or answer any question that you may have, okay? You can email me over the weekend, prior to the market opening, after the close, or even during market hours. Makes absolutely no difference, okay? I'm always there. I'm always accessible for all of my students. Okay, remember, that's the number right there. Give them a call at 310-598-6677. If there are no further questions, we're ready to close the presentation today. I just want to say thank you so much for attending. I hope you learned something about exiting today, because you can apply these 3 methods. My only suggestion would be to paper trade them for a while so that you get a better understanding as to the process and you can really fully understand them like the back of your hand before applying them with real capital, okay? So really practice them, research them, see which one best suits your needs and makes you feel the most comfortable. As we close, I just want to say thanks for attending today. I wish you all the best of luck, and I look forward to all of you becoming students of mine in the secrets course that we just talked about. Thank you so much. Take advantage of that special offer, and I hope to see you in class. Okay, have a great day, and I'll see you next time. Bye-bye.